Welcome to another stage analysis video. It's Sunday the 3rd of March 2024. I've got a lot to get through as always in the weekend video. Going to try and keep it to a shortened hour. So it's been trying. I don't want to drag it on too much for you. So I'm going to start off today with a look at some of the US watchlist stocks from the weekend scans before getting into the rest of the content for the members after that. But starting off with Net, which has come up in the watch list before, had a recent earnings reaction. So just looking at the weekly chart here, you can see the earnings reaction made a strong stage 2 continuation breakout. This is a chart from the last 3.5 years showing the previous stage 2 advance, where it rolled over into stage 3 and quickly broke down into a deep stage 4 decline before starting to base over the course of the last few years. So we started to break out into stage 2 back in November. It's made good progress since then, so it's now tightening up on here. So if we drop down to the daily chart on this, you can see the tightening up that's going on in here. So one of the methods that we use with the stage analysis method is to get into a pullback entry is we look for the stages on lower time frames. So starting off with what's the weekly stage, we're in stage 2, we're in the early stage. We've got a little bit extended in the short term, as we can see here. We've got the ATR candles, the earnings move, got us outside of the normal ATR range here. It's now pulled back in, sitting right around the 1 ATR level currently. So it's in a more favourable position currently to start to move. So we can then drop to look for an entry point down to some of the lower time frames. So we start off with the half a day, 195 minute chart, see how it's doing on that. It's had a stage 2 continuation with that earnings gap, and it's pulled back into the moving averages here, so it's sitting right around there. Drop down to the 2 hour, you can see a base structure developing across here after that, so looking for a breakout move through the top of the range here, so 102.5 roughly area. Same with the 1 hour, the 30 minute will be similar as well. So looking for a strong move through that 102 area roughly on this lower time frame. So we'd want to see, we look for similar kind of events as we look from the weekly chart with a stage 2 breakout. So when you're looking at a stage 1 base on an intraday time frame, what you want to see with the breakout bar is some heavy volume coming in on that bar. So you're not going to get what we got on the earnings day move in general. That's a rare occurrence that only happens on the earnings bars and some other larger events. But generally, with a normal stage 2 breakout, especially from a pullback entry, just getting a little bit of momentum in it, you just want to see a little bit more volume coming in on the average. As if you don't see that, then there's much more chance of it forming what we call an up thrust, which is where it just immediately comes straight back in again. So a failed breakout attempt at that point. So we're looking for this kind of move up and above the top of this developing stage 1 structure on this lower time frame. So go back to the daily chart here. So as I said, then on the daily chart, you can see it just, there's a little pop out from here. So in the normal ATR range, so you're still sitting at the 1 ATR range. So a break above there would just push it up towards its 2 ATR level. So plenty of room to run in the near term for this one. And as I said, continues the weekly is still quite early in stage 2. We're still within the first 4 to 5 months of the stage 2 advance here, so could progress gradually up towards those previous highs is the idea. But if it does show any signs of weakness, then we would be getting out of the way. But at the moment, by using that intraday technique, it saves you on the pullback entries from guessing where the pullback's going to stop, whether it comes all the way back down to support or whether it forms a higher base as it is currently around this sort of $100 level and then starts to move back out again. Go on to next one, HUBS. So this one's been moving up in stage 2 for a little while again. It had like many stocks through the end part of last year into the August to October period, it developed stage 3 characteristics and started to break down below its 200-day moving average, formed a shakeout move. We saw the same thing in the major markets as well, with the S&P 500, etc., having a shakeout with a singular week dropping into stage 4 before turning back around again at the start of November, starting to surge strongly back higher again. So HUBS was similar in that regard, made that stage 2 continuation breakout attempt and is now sitting in a reasonable level here, just popping back through its 180R level here above its 21-day moving average. So looking for it to continue to ride up back towards its highs there. Looking on the weekly, you can see that move in more context there. So the stage 3, the failed or brief stage 4 before it reverted back up towards the highs and made a continuation breakout. So looking for a further continuation move on this one. AMKR, another one in focus at the moment. Again, back through that 180R level in the near term. I've highlighted the ATR bands on this one with the +1 and the -1 ATR range to give a little bit more context. There's a little bit of a V bottom move, and if you look at it without the ATR bands on, give us as much context there. So just showing how it's moving here. We'll put that back on. So looking for a push and break to the upside with a new stage 2 continuation. Look on the weekly, you can see it's had a choppy range recently, but tightening up and a big recent move there. So tight consolidation compared to the move off of the October low. So looking for a further continuation in that one. QRVO also making a stage 2 continuation breakout attempt. You can see a little bit of an inverse head and shoulders pattern to this one. Look at the weekly on this. So coming out of the big stage 1 structure, had a few failed attempts, so really early attempts. So I've talked about this many times. When you come out, you start to form a range and you have an early breakout when there's still been a big stage 4 decline in the near term. So even though you've got a little bit of an inverse head and shoulders pattern going on this one, it's still very early at that point. There's still going to be a lot of overhead resistance. For example, if we'd add an Ichimoku cloud to this, you'll see at that point it was still only just going into the cloud resistance area. So we tend to get the best stage 2 breakout attempts when we've had a decent base develop and it's past that old resistance, which you might not necessarily know where it is when you've got a deep stage 4 decline like this without many bases, but you can generally project it ahead by at least 6 months or so, depending on the time and length of how this is done, and the weekly Ichimoku cloud can really help with that, just to visualize where that potential resistance is, where it might start to lighten out again. So you can see at the moment started to lighten out, starting to flip to the positive side, and this is making continuation breakouts to new highs here. So at the moment with a new stage 2 continuation after a big shakeout move here, weekly spring from the lows here, so coming out of this much larger structure and pushing out to new highs. So looking for this to continue on in stage 2. INFN, so this one a little bit of a similar to the kind of look we just said about with the QRVO one, where it had the failed breakout attempt. So it's had that little bit of a small inverse head and shoulders pattern on the weekly time frame here. If we go onto this one, you'll see that more clearly. You can see the stage 4 decline wasn't too long low. It was only 6 or 7 months or so there before it started to turn around here. So there's going to be a little bit less overhead resistance at this point. So it's already through some of that time-based resistance, but still going to be in that zone a little bit at the moment potentially. Yeah, still underneath at the moment, so not quite clear yet. So it needs to push on a little bit further into the 5.5, 6 area in order to start clearing some of that older resistance. But at the moment you can see trying to fight through that currently with a new attempt to move into early stage 2, and we've got earnings coming up on this one on the 6th. So AEHR, a laggard in the semiconductors group, which has been the leading group for a long time now. I think we're on our 7th week in a row for it at the top of the RS rankings again, after going sideways for a while and consolidating and then starting to push out again. It was the leader for a lot of 2023 as well. So it's been by far the best group over the last year in terms of the stock groups. You've got the crypto stocks and things like that also had more larger percentage moves, but they're not technically official groups, more of a subgroup. But from the traditional stock groups, the semiconductors, home builders, etc., were your major stage 2 leaders in that regard, but obviously not having the same ginormous percentage moves as you see in the crypto type stocks. So AEHR is one that rolled over and has been in stage 4 and doing underperforming, doing the opposite to what the rest of the semiconductor group has been doing really recently. So you can see with this attempting to form a higher low, attempting to form some kind of minor base structure around its 50-day moving average. So highlighting this one as got with the market starting to show some strength and broaden out a bit, we're starting to see some of the laggards start to move. So again, we're getting a few of those short covering type rallies happening, and the stocks moving into what we call stage 4B minus, starting to have good little runs. So a stage 4B minus move is a stock that's potentially bottomed, but it's technically too early to be called stage 1 yet. So it starts to get back above its 50-day moving average. That's when a stock gets to that 4B minus potential area, and from there we look for a move up towards the still declining 200-day moving average. So in this case, there's around a 70% gap between those at the moment. So there's plenty of room for that, what we call the automatic rally. So you're selling climax and the automatic rally type move. That's what 4B minus move is really, before it starts to base and in a broader range. But swing traders sort of area with these kind of moves, but you can see still been underperforming in the near term. But we drop down to a lower time frame on this. Actually, let's go to the 195 minute. You can see that base developing. So we've got stage 4 developing a stage 1. So we're looking for a move up and out through that 19 to 20 area on some stronger relative volume as it moves out, potentially to move into stage 2 on the intraday time frame. And as I said, it would then move into 4B minus on the daily time frame there, the weekly time frame.